are diving into a unique fund that combines exposure across different market caps, the Groww Multicap Fund. So if you're looking to diversify across large, mid and small cap stocks, this fund could be worth considering. So let us find out whether it's worth considering or not through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what a multi-cap fund is about. So, a multi-cap fund is a diversified mutual fund that can invest across market capitalization. So, according to SEBI, it must be invested in small cap, mid cap, and large cap stocks, and 25% of the capital invested is in each cap stock. The remaining 25% is in the fund manager's command. So now, as we have a good understanding of what a multi-cap fund is about, let's move on to understanding a few basic details about the Groww Multi-Cap Fund. So as an NFO, it opens on 26 November 2024 and closes on 10 December 2024. And some of the key features of this fund are, it is an open-ended fund type which belongs to the category of equity multi-cap fund, and it has Nifty 500 multicap 50:25:25 TRI as its benchmark index. So the exit load according to this fund is 1% if you choose to redeem it within 1 year. And there is no entry load in this fund, and the minimum investment amount you need to start investing here is just 100 rupees. And the fund managers for this fund are Mr. Anupam Tiwari, and according to the riskometer, the risk involved in this fund is very high. And the primary investment objective of this fund is to see that it seeks to achieve long-term capital appreciation by predominantly investing in equity and equity-related instruments of large, mid and small cap companies. So as we know a few basic details about the Groww Multi-Cap Fund, let's move on to analyzing whether investing in it is worth it or not by analyzing the pros and cons of investing in this fund. So let's start with the pros. There are 4 main advantages in this fund. Number 1 is the diverse exposure across market cap. So the Groww Multi-Cap Fund offers a balanced exposure across large, mid and small cap stocks. So this mix can give you the stability of large cap while tapping into the growth potential of mid and small cap companies, which is ideal for a well-rounded portfolio. Number 2 is the flexibility in asset allocation. So with a multi-cap approach, the fund manager has the flexibility to adjust allocation based on market condition, allowing them to overweight or underweight sectors as opportunities arise. Number 3, higher growth potential than pure large cap funds. So by including mid and large cap, small caps, this fund could provide higher growth potential compared to purely large cap fund, as mid and small cap companies often have more room to expand. Number 4 is that it's good for long-term growth. The diverse stock selection makes this fund a good choice for investors with a long-term perspective, allowing you to benefit from the compounding growth potential of various sectors and companies. Now let's take a look at the cons. There are also 4 major potential drawbacks to investing in this fund. So number 1 is the higher volatility due to small and mid-cap exposure. So including mid and small caps can increase volatility, especially during market downturn period. This means you may see bigger fluctuations on your price in your investment value compared to a large cap only fund. Number 2 is the higher expense ratio compared to passive fund. Because this is an actively managed fund, it generally comes with a higher expense ratio. This may eat into your returns over time, particularly during periods where actively managed funds underperform their benchmark index. Number 3 is the market timing risk. So while flexibility can be an advantage, it also comes with market timing risk. If the fund manager's allocation choices don't align with the market movement, it could impact the performance negatively. Number 4, not ideal for conservative investor. So with its mixed cap approach and higher volatility, this fund may not be ideal for conservative or even low risk investor looking for stable return, especially those who are uncomfortable with fluctuations. So these are also some of the potential risks you might be facing if you choose to invest in this fund. So you need to consider all these factors carefully before choosing to invest in this fund. Now, what is the final takeaway? Is investing in the Groww Multi-Cap Fund worth it or not? So as you can see from our analysis that this fund offers a unique mix of stability and growth potential, combining exposure across large, mid and small cap stocks. But with that comes increased volatility and a higher expense ratio, making it more suitable for long-term growth-oriented investors with a higher risk tolerance. So it completely depends on what kind of investor you are, what kind of risk tolerance you have, and what kind of investment time horizon you have for your financial goals. So these all factors determine investing in this fund will be worth it for you or not in the long run. But our personal opinion is that if you do want to invest in a multi-cap fund, it's better if you invest in an existing similar mutual fund that has a track record of minimum 7 to 10 years. Why I'm investing or insisting on 7 to 10 years is because in 7 years the market cycle would have gotten completed. So you have a chance to know how it has performed in the highs and lows, and then take a calculated risk based on what you have seen. But here, as an NFO, you do not know how this fund is going to perform because it is yet to build a track record. So, without proper portfolio and research, investment in this fund will be risky because you will be taking a blind risk. That's why it's better to invest in a fund which has a track record of at least minimum of 7 to 10 years. But if you do want to invest in this fund just to see how it will perform later on over the years, then it's better if you invest it through a satellite portfolio instead of your main investment portfolio. So whenever you have some spare money, then you can start investing it through your satellite portfolio with a minimum investment as a trial or an experimental basis. And over the years, if it performs well, then you can increase the investment amount accordingly, according to what you think is fit. So what finally, if you believe that you need some professional guidance because you do not have sufficient knowledge about how to navigate the market, or you do not have the time to research about it because your life is already hectic as it is, then you can consult with a certified financial planner who, as a professional, will look at the suitability of the fund's investment objective, risk profile, overlap ratio, allocation, and suggest it to you according to whether it will best serve your unique financial goals or not. So, making your investment journey more hassle free and simplified for you. But definitely, consulting with a professional will help you in the long run.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.